Hello there, I hope you're doing well. In this video, I'm going to break down the inversion chain state of delivery, also known as itCISD. A failed choose chain state of delivery is not a loss, it's an entry in the other direction. The inversion chain state of delivery is how you master continuation traits and stop fighting the order flow. In this video, I will also show some examples, some real traits that I took, and I hope you enjoy it. The concept: a true chain instead delivery shall hold if price is ready to move in that direction. If a bullish true chain instead of delivery gets invalidated, price closes below its body, failure tells you the price isn't ready to turn yet. That means, guys, let's say the market ranging to the low, right? Then initially break this high. We break this high with the body closed, and then we left a gap, all right? This gap, let's say. Then the market will either respect and go higher. You will wait for more confirmation, look for SMTs here. If you have SMT, look for the time, what time it is. Yeah, you will have understanding. You will also have predict. Also, you can enter long. But however, if the price closes below its body, let's say this is our candle. However, price disrespected and closed with the body, not wick, not wick. Wick did the damage. Yeah, sometimes the wick did the damage and the market continued rally higher. But what we're saying here, if let me just erase this. What we're saying here is if market closes below, then this is your entry. This can be entry because the body closes. And look, if we left any gap and then maybe traced into back higher, then target the sell side, whatever it is, right? This is how you use a inversion changes of the delivery. So it wants to hunt more liquidity first. That failure creates an inversion true chain instead of delivery, an entry in the opposite direction. All right, now we got bearish inversion chain instead of delivery from a bullish true chain instead of delivery failure. Here is an example that I took. Let me show you. So, first of all, I went short right the first trade. I went short. The reason being because I thought this is our chain state, and then my stop was, I believe, yeah, above here somewhere, above the gap. Now, why did this fail? Well, first of all, look at here. What is this? This is a gap. This bluish rectangle, it's a gap. It's a bullish fair value gap. And then what is this? This is an SMT, micro SMT with a yes. And the market stopped me out. And then what did I did? As soon as we closed, look at the body here. This body closed above this candle. This candle was super important to me. Not only this, but also this. Both of them. We closed the body. And then as soon as we retraced a little lower, I went long. And the market, boom, shot high. Where was my stop before all the thing? Because the candle, the wick came way too low. Look at here. You see this low? We create an imbalance. Look, the wicks, sorry, the body are not over, over, you know, above each other. Like there is a gap, there is a space between. This one in and of itself becomes a gap. That's why market trades in and this shoots higher. And then I think I took the whole profits up here. So let's read some of this text. A bullish sequential SNT forms a bullish true chain instead of delivery that validates close above the open. Exactly. This one closed with a body above this gap. What could have been better is when, let's say, we form this high, the body closed above this high. So this gap becomes super important. So whenever gap enters, and then we look. But we already spent so much time in here, so it's important. Like, almost 10 a.m. opens here, so maybe market will not just respect this and just keep rallying higher. So price retests the true change instead of delivery, but instead of holding close below the body close of the change instead of the delivery candle. Yeah, sometimes, as you can see, this is telling. Sometimes the market will tend to revisit, sometimes not. But the most important is just we have to wick close with a body, not just a wick. All right, that close below the body equals bearish inversion change instead of delivery activator. Now, this is not a perfect example. Why? Because where I entered, the body itself closed above the gap, and not the whole change step, not this high, not this high, so to say, like some example here. But this works as well, just as a same as this one. So enter short immediately on the close, or wait for price to re-tackle back into the true chain instead of buy. Uh, oh yeah, this is like a opposite. This was like a bullish, but same thing applies to, to the bearish scenario. It's like vice versa. Everything's fractal. Same thing can be applied to the bearish side. What we're simply saying, let's say we're trading higher, and the market since it came down, this is like a change state, right? You look for something here, a gap we left open, and with what did we took out this low? With a body close, with a body, not a wick. And then we trade higher, maybe in like 50% like PDA, whatever PDA you have, inversion fair value, I should say. Yeah, and this could be a target to lows. And look, if the market might be respecting it, let's say went higher, and then the body closed above, and then yeah, could be a opposite direction to the higher. Check out more liquidities. And then lastly, stop recent swing high before the inversion change state of delivery forms. Target drawn liquidity below. Yeah, let's say that this did. Let me erase this real quick. All right. Let's say that this did respect it, right? Let's say you enter right here. Where is your stop? The best case will be somewhere here, but if that's too high, look if we formed any SMT inside of this the box imbalance, fair value gap, inversion fair value gap. If we form any SMT, your stop can be shorter, maybe above here, or maybe above the here, up here. That's also possible, but it depends on the price action itself. And then your target will be some liquidity, either true open or yeah, drawn liquidity on low. Same thing applies to the bullish inversion true chain instead of delivery. Same thing or vice versa. There's another example that I took. We got an SMT 90 minute. Took out this high, this buy side, exactly after 9:30 open, and then I went long. Why? I thought that this would we got a change it. Like we took out this high market structure, like change. And then yeah, I just went short. But the reason why this failed, why I went short, is because I thought the body closed above this high, so we might be disrespecting this gap. But why this fails, because we took out this high with these gaps. And what is this rectangle? What is this red shaded rectangle? It's our in 1 hour sets out imbalance, buys out inefficiency. It's a inversion fair value gap. So within a gap in higher time frame, that the higher time frame narrative tells us the price is bearish. So then my stop was I think below here or somewhere. Like I stopped out. Then as soon as the market trades higher, I entered. That's why I marked this one out. This one is our change state. See, we close the body. This is a good example. Market went higher. Is there any gap we left open? No. We mark out this gap. This is important because we inverted that gap with a body closed way low, and also we created a change state of delivery, or true change state of delivery. And then I went short. I pyramided, went more short, and then partial this low. Where was my stop? My stop was above here, above the body. This one. It could have been also somewhere here. But yeah. And then partial more, and then yeah, I left some for runners. Yeah, let me read this real quick. Bullish inversion true change steadily is the same logic inverted. Bearish sequential SMT, bearish true change delivery validate. Price close above the body close. Bullish inversion true change delivery ends a long stop on the recent swing high or low, and then target high time frame drawn above. And then your target will be some draw here, just like mine. Guys, what is important here is the risk management. So master risk management and also master psychology, and the edge, the strategy in itself is the easiest. I mean, what I say is that I know there are some stupid trends out there, some stupid edge strategy out there, some I have fallen into that category. But to be honest, I believe that most of them like work. Almost all of them work. Like there's a reason why they exist, and most of people who use them are profitable. The only thing that separates them from you, let's say somebody who's a trend line trader, he just draw trend lines. Let's say we're in a buy program, he's a bit like, oh, we're in a trend line, and then whenever we break, we retest and we got shorts. I have fallen into this category, guys. I mean, this in and of itself is maybe not bad edge, but to be honest, it's not really and like you don't understand the algorithm, the enigma in itself. Uh, but to be honest, the most important is just stick to it. It might take years, um, and then you have to master three things. First, psychology, which is yourself. Second, risk management, know how much to risk. Learn like calculation, math. And then last but not least, which is an edge. And then look who is like there are so many gurus, there are so many mentors out there. Look who is like you trust, and then yeah, just learn this and stuff. Why it works. If I'm bullish and bearish sequential S&T forms, but the bearish true change to the delivery then gets invalidated by a close above it, price isn't ready to go lower. For the short-term manipulation is over. The real move is still higher. The inversion true change to the delivery is a signal that the retracement just ended. Yeah, guys, it's just the same thing that I just repeated now. Same thing with, let's say, market trade lower, went higher. Let's say you're looking for a long, this is our chain state. You're looking for a long, maybe here, trace back, right? However, if the market didn't rally higher, maybe stop you out, what is your next move here? Oh, sorry. What is your next move here? If the market, let's say, stopped you out, you're waiting. By the, let's say this gap, we close with the body closed. What is your move? Maybe wait till a retracement occur, maybe with a wick, uh, rebalance, enemy rebalance, if you know that. And then your stop will be maybe the swing high, maybe you form any SMTs high or in this low, your stop will be there, target the lows. Sometimes this occurs, the market will not always have the power of three manipulation and then go higher. This always will not occur, but of course this is a good setup that I like. The same thing vice versa, right? The market, right? This is a good price action. This is what we want. But sometimes the market will just like have continuation days or yeah, reverse a day. Last but not least, failures are signals. A failed true change set of delivery is not a bad trait. It's information. It tells you exactly where the next entry is. The inversion true change set of delivery is how professionals load continuation positions. Guys, I hope you got something from this. Uh, Let me know your thoughts are. Leave a like, subscribe. See you guys next time. Be safe.